Welcome everyone to boot camp drill number 12. This is the last drill of our boot camp in which we will learn how to manage our options portfolio. We're not going to talk about how do I fix this trade. We already covered that. Today we're going to step back and look at our trading account as a full portfolio and then decide how to make a decisions as a portfolio manager. I don't need to pay to expensive portfolio managers because, hey, if I can do on my own, why not? So that will be the agenda for today. We're gonna take a step back, look at the options or account at a portfolio level, and then drive the decisions based on that. Okay. As always, this is not an investment, financial, or tax advice. This is for your and my education only. I am sharing what I am doing, and you share what you do, and you enrich me with your questions. So treat it like that. Don't trade based on what you hear or what you see in this presentation. Okay. All right, a quick recap of our previous sessions. We started session number 1, bootcamp drill number 1. What is an option contract? That was a very basic one, right? Like someone completely newbie trying to figure out what's a put, what's a call. And we have, till now, we have finished all about how to exit the trade. That was our last session. In between, we have gone through whole lot. We looked at how to enter trades, how to manage the trades that are going on, how to create our edge, should we buy, should we sell, how to determine the pricing of options, so on and so forth. So if you have missed previous sessions, you can go to the website and you can watch those recordings. Like I said, this is the last session for this bootcamp series. I don't know if I see a lot more people from our community asking for the basics of options, etc. I might do it again, but I don't know. So if you want to go back and look at the recordings, those are available on the website. Sign up as a member, go to members bootcamp right here, and then you should see the recordings of all our previous bootcamp sessions. And otherwise, you can reach to me on view it on YouTube or a podcast. A podcast is a little different. I talk about some, small tips and tricks or what I've learned on the podcast. You're welcome to join our Slack channel or email me or go to the website that I already talked about. Follow me on Quora. I'm active on Quora as well, especially on the options section within the finance and Twitter. Okay, before I jump into today's session, if you have any questions, throw it on me. Otherwise, we'll get going. So till now, I'm assuming that all of you know how to place an individual trades, how to check what's the probability of profit, what's the delta of the trade, what does that delta mean to you. You can also find out what's the overall delta of your position, etc. So now it's the time to look at a full portfolio level. But before we dive in, quick housekeeping. This is going to be a little involved topic, and I would say the most important one, because at the end of the day, I want my portfolio to go up. I don't really care if one of the trade is losing. My end goal is my portfolio. So if you have Facebooking, close it, close your Instagram, TikTok, or Netflix. You can watch those movies later on. Those are not going anywhere. Shut the door so that you can focus here. If you have a kids or grandkids coming here and disturbing you, ask them to stay out for next hour and 30 minutes so that you can be completely focused here. We're going to talk about a little more details on which are a little more involved. So I want to make sure that you are completely focused here. You can give your whole attention to today's presentation. All right, let's dive into it. And options trading is a journey. And we started this journey almost 12 weeks ago, we started to learn how to tackle each trade, right? How to start adding or initiate a trade. Then we looked at what are the best conditions in which to initiate a particular trade. We also looked at if that trade is not going in our favor, how do we manage it? We talked about 4 management techniques of trying to tackle a trade that are going against us. And then in the end, we also looked at what's the right way to exit the trade. How should we decide when to exit a particular trade? Then we also looked at not at a trade level, but we started looking at a ticker level. So what I mean by ticker level is, say on a Facebook, you have a stock, on a Facebook, you have a short put, you have a call. We started looking at overall, what's my position in Facebook? How does that impact? That's where we looked at the overall delta of a particular ticker. Make sure if you are bullish outlook towards Facebook, make sure your overall delta is positive. We started making decisions one level up from an individual trade to at a ticker level. So today we're gonna step a level further up. We're gonna start tackling and making decisions based on what's right for our portfolio, not just for a particular trade, not just for a particular ticker or a stock symbol, but what's right for my portfolio. So this is the journey, and this is the, like I said, this is the last bootcamp session. So we want to make sure we discuss how to eventually move from a trade all the way to portfolio level. How to stop looking, focusing on individual trees and start looking at the forest as a whole. So before we get into, let's dive into some of the basic concepts. And these are the terms you might have heard before also. These are the terms you will see in any investing journal, but how these terms like beta help us is what we're gonna dig today. First one, beta. What's a beta? Beta is a measure of stock's volatility in relation to the overall market. If my stock is very volatile as compared to the rest of the market, it means that stock should have a high beta. Every stock has a beta associated with it. And we can find it on Yahoo Finance. You can find it on any other financial or a stock tracking website that you use. If you go to their website, you will see that they have a term called beta, which will tell us, is it how volatile is it? And based on that, I can decide if I want to pick that stock and have it on my portfolio or not. So normally the market has a beta of 1. And when I talk about market, you might have a question, what is this market? Market is overall, let's say in US, we could consider it any index which is representative of a market. The pretty standard one is S&P 500, because that has got stocks from all the sectors, all the 11 sectors of the market. So S&P 500 has got a beta of 1. A stock that swings more than S&P over time will have a beta of higher than 1. But if it moves less, then the stock's beta is less than 1. Now, this has nothing to do with how profitable a stock is or not. So let me give an example. Say if, let's say if S&P behavior is like this, right? This is 0%. This is your percent high or percent low, movement up or down. Now, if this is S&P, and if I have another stock which is like this. At the end, from a return perspective, both of them have not done anything over this period of time. They returned 0%. But this stock is a lot more volatile than S&P. It makes very much bigger swings up or down as compared to S&P. So this got a beta of 1. But if you have another stock, which is very muted, those are called old boring stocks. Again, from a return perspective, all three stocks are exactly the same. They have done nothing over this period of time. But this stock has a beta less than 1. That's essentially what beta tells us. How volatile is a stock as compared to the market? Okay. So it is important to understand this concept. So let's continue on this one. A stock with beta 1.5 means it is 1.5 times more volatile than the market. Means if a market goes up by 5%, the stock, in theory, could go up by 7.5%, or vice versa. Now, whenever you look at this beta information, generally it will say, beta over last 5 months, 6 months, beta over a year. So it is being calculated, recalculated based on how the stock and then S&P or the market, what's the correlation between them. So if a higher beta, it will have a higher volatility. Again, it will go up more as well as it could fall down more. It has got no directional indication. And higher beta doesn't mean that stock will go up more than it will go down. That doesn't mean it. All it means is it is more volatile. It is more volatile by this multiple number as compared to market. Okay. So they would swing higher or lower in either direction, up or down. And because it's more risky, it's more volatile, so it will give you both. It will have a more risk. If market goes down, this would potentially fall a lot more than the market. But if the market goes up, it could go more higher than what market has done. So there is a more risk and there's a more reward. A stock with beta of 0.5, that means it is less volatile as compared to the overall market. Just it's the reverse of it. If a market goes higher by 5%, let's say S&P is up by 2%, maybe the stock will be up only by 2.5%. It does only half of what the market does. So it will have a lower volatility and it will swing less in either direction, either it's up or down. So less risk, less reward. At the end of the day, it's all about risk and the reward. If you want to have huge rewards, you have to take huge risk. Let's take some example. For example, Facebook. And this is a screenshot from Yahoo Finance. If you go to Yahoo Finance, look at Facebook, it'll tell you the beta, 5-monthly beta, 5-year monthly beta is 1.26 for Facebook. It means it is quarter more volatile than what the market is. And we know Facebook is a momentum stock. When these stocks go up, they go up huge. When they come down, they fall down huge. We have seen what happened to some of the momentum stocks in last 2-3 weeks. Compare and contrast it with the utilities, XLU, which is an ETF. Utilities, old, still, it's a favorite of old grandpas, retired people, because it doesn't move much. So it won't give you heart palpitations because it kind of stays steady. Utilities is a business, you need to use your utilities. You can sacrifice everything, but we need to have our water and heat. So not much of a movement in utility sector. So beta is 0.42. Now let's pick another one, which is align technology. Again, this is in a new field of your fixing your teeth alignment. Kind of I would say a biotech, a meditech company, which is generally will be more volatile. That's beta is 1.91. So you could see more volatile the stock is as compared to the market, higher would be its beta. Less volatile the stock is, lower would be the beta amount. Now let's talk about portfolio beta. What does a portfolio beta would mean? Now your portfolio will have multiple tickers, right? We looked at Facebook, XLU, Align. Your portfolio could have 10, 15, 20, it will have a lot of tickers. So if you were to know what's your overall portfolio, how that would change if S&P moves, that's something called as portfolio beta. Now this would be the average of all the beta values weighted for the tickers amount in the portfolio. It's a weighted average of the beta value. That means if you go back to high school math, you need to find out how much is the Facebook, what percentage is your Facebook of your overall portfolio, what's its beta, multiply that. Fine, pick further another one, pick for all the tickers, then take an average. That's a weighted average. That will become your overall portfolio beta. That will be your weighted average beta for the entire portfolio. And now if that is greater than 1, it means it's more volatile. So that will tell you the overall volatility profile for your portfolio. How volatile could your portfolio be as compared to market? Because when we're looking at a portfolio, we're looking at how to manage this portfolio based on what's happening in the market, right? We're not trying to manage it at an individual ticker level. If you could, great. But the moment your portfolio starts to grow, you have 10, 15, 20, 50 tickers. It's virtually impossible for us to adjust, each and every ticker, just trying to fight out and adjust based on what's happening in the market. So we take SPY, or we'll talk about some of the other tickers which you can take as a market proxy, and then see how will my portfolio behave if SPY moves like this, or if other QQQ moves like this. And then we could make a decision based on that. But for us to know how our portfolio could behave, we need to know what's my overall portfolio beta. So that's what a portfolio beta would be. It would be a weighted average of beta across your entire portfolio. If it's greater than 1, it is more volatile than market. Less than 1, it's less volatile than market. So that was about beta. Now don't bring up your calculators or start looking at your positions on, okay, I want to find out what's my portfolio beta is. But don't have to do that. I just wanted to introduce that concept because we're gonna use that when we start talking about how to make portfolio level decisions. And trading platforms already show it, so you don't have to calculate this one. Next concept we want to talk about is delta. And this is something that we already touched upon in our option Greek sessions. So will be kind of a refresher, or if you have not attended that one, maybe this is an introduction to one portion of delta. In options, delta tells us a lot more things, but we're going to talk about just one characteristic of delta in today's session, and we will see how to use it in arriving and making portfolio level decisions. Delta. Delta will tell us the rate of change of position. Means it will tell us how much the position will change for $1 move up in the underlying stock. Everything else staying constant. So if you've been dealing only in stocks, you might be wondering, what the heck is this? If stock goes up $1 and I have 100 shares, it will go up by $100. It's 1:1 movement. That is why I didn't mention delta show how much the stock will change, how much your overall position will change. And that position could be you have a stock, you have an option, you might have sold a covered call, you might have bought some protections, you might have bought some out of money puts. I don't know. You might have a trade which is expiring in October, then you may also have a trade which is expiring in November. It could be a mix of everything. But if you look at your overall delta of the position, full position for that ticker, it will tell you how this whole ticker would behave. Again, we're not talking about how your individual, let's say if you had a stock, how your individual stock would behave. Like I said, you could have 100 stock, you could have sold a call against that stock, covered call. Then maybe you are also a little bullish on this one, you want to acquire it more. You could have sold, let's say, November expiry put or put spread. Now with all this mixed up, what's your overall delta? That tells you how this whole mumbo jumbo would move together if this XYZ stock goes up by $1. Okay. So that's a quick recap. We had talked about it. Let me make sure this stays in everyone's mind. Delta stays between -1 and 1. I mean, of course, you have to multiply it with by the number of stocks. So puts have a negative delta and the calls have positive delta. Let me just bring up for a quick refresher. So we looked at, say, we were talking about Facebook. We'll go to FB. Okay, FB. All right, so here you see the deltas in this column for Facebook. It's 0.27, 0.32, 0.36. It will stay between 1 and 0. On the call side, it is positive. On the put side, same delta, it is negative. Negative 0.48, negative 0.30, negative 0.87. So the deltas are available on the trading platform. So by now, we have already figured out how to know the overall delta in a particular ticker. Not in a particular trade, but overall delta on a ticker. And at least we did that on Think or Swim, saying if I'm interested in FB, I can come here and it will tell me my overall delta in Facebook is 8.65. Now, I do have multiple positions in FB. In this simulated environment, I've got 5 stocks. I had sold a put, I had bought a put, but the net effect of all the positions is my delta is 8.65. So this we already covered. We know how to find it out. If you're not, then we should know by this now. So go back and look at the trades where we talked about deltas and how to find the overall delta for a particular ticker. OptionGig delta session. So if you have 200 units of FB, means 200 stocks of FB, Your overall delta is 200. It means if FB goes down by 200, your overall position will change. If you have only 200 stocks, that is the only thing you have in Facebook, then your portfolio will change by $400. It will be down by $400. Right? Pretty simple. We all know that. If it goes up by $1, your overall portfolio will go up by $200. But if you also have AMD along with it, then your overall delta of AMD is 100. It goes down, your AMD position goes down by 100. AMD goes up by $2, that position goes up by $2. But you have both in your portfolio. That makes things interesting. Because till now, we have only been looking at individual ticker level. We started with individual trade level, then we moved on to individual ticker level, right? How to find the impact of FB moving, how to find the impact of AMD moving. But we never looked at what will the impact on portfolio if both of them, I have both of them and they move, right? So if Intel goes up by $1, AMD goes down by $2, portfolio is zero. But you have 20, 50 tickers. And not just stocks, but you'll have some options, etc. And if you were to calculate this by hand, and I think that's why we need portfolio managers to do it. But good thing is trading platforms show us this information. So your $1 million question is the delta and the beta that we talked about are specific to those tickers. And I have 10, 20, 50, or 100. I don't know. That depends on your journey, on where you are on your investment journey. If you're just starting off, you might have 5, might have just 10. But if you're someone like me, I have, at any time around 80, 90 tickers in my portfolio, which are active. And I'm not the most active one. We have folks in our community who are day traders. They probably will have, or they are full-time traders, they probably will have more than 100 tickers, 100 to 50 tickers in their portfolio. So how to find the impact of overall market movement, the overall impact on the market movement on the portfolio, not specific to each ticker. I'll go bonkers if I have to figure out what happened to FB today, what happened to AMD today, what happened to Google today, what happened to XLU, XLF, XLE. How am I going to manage my positions because I have so many of them? Right? It's simply not possible. So that's where we look at how to find out the impact of, let's say, what the market has done and how it's going to impact my overall portfolio. Again, not at an individual ticker level. You're looking at when the market moves, how will my portfolio move? I just need to know that. So that tomorrow, if I, elections coming up, if I'm scared that market will fall 10%, SPY will fall 10%, 15%, I need to know how that will impact my overall portfolio. FB could fall 20%, I don't care. Or XLU could fall 2%. But if I have some idea about overall market, what will happen, I need to know how that will impact my portfolio. And that's a question that we will address now. Because answering this question will help us understand the overall risk in the portfolio. So before I move along, let me sip some water. If you have any questions, please do ask. Otherwise, hold your peace forever. Question from Mesh, can you show us an example? Yes, I will. So we will dig deeper into how to find this. I will use Think or Swim. On each, iTrade, I use percentage of portfolio that gives me the investment percentage by stocks in that account. Okay, but what it doesn't give you is not all stocks move, in the same way when the market moves. All stocks beta is not the same. The beta of every stock is different. So even if you, even if let's say FB is 25% of your overall portfolio account, if market goes down 10%, it doesn't mean that your, overall impact in FB will be 2.5%, because FB has got a different beta than market. Question from Steve. I'm struggling to understand how delta run from -1 to 1. You can have delta example. Okay, so Steve, what I meant was delta at an option level. For when you're trying to pick an option trade, when you say, it will be like 0.32, 0.27, of course, then you'll multiply it by 100. So that's why I meant to say is when you're looking at a deltas of your option position, it will be from -1 to 1. Even for your stock, one stock has got delta of 1. So if you have 100 stock, that's what make your overall delta 100. So, and if you are short stock, that will be your position negative delta. I hope that clarifies, Steve. Oh, let me just, okay, cool. All right, so before we dive into the live example, we also need to add both the things. We talked about delta, we talked about beta. And that's the reason why I had to refresh those beta and deltas is I'm going to talk about third term, which is portfolio beta weighted delta. And that addressed the question of what Ramesh had saying in an E-trade, he can find out how much the percentage is allocated from each stock, but each stock could move differently when the market moves up or down. So if I just know what's the delta coming from the stock on the overall portfolio, that's not enough. I also need to know if a stock moves, which of those takers, some of the takers could move more violently if they have a beta of more than 1. Some of the takers could make very less movement if they have a beta of less than 1. So I need to find out at a portfolio level, what is my beta weighted delta. All those deltas need to be readjusted at a portfolio level based on the individual betas of the each takers. So this number will tell us the beta weighted delta, how much the portfolio will move. Again, this is based on the historical correlations between the takers. So this is not, a line in the sand. You cannot hold your broker platform or call your brokerage saying, my portfolio beta weighted delta was 20. S&P fell down $10. Why am I losing $5,000? Right? But this is an indication, and it is based on the historical movements, these beta values. So, but it gives us a pretty good idea in terms of how much my portfolio would react based on $1 move up in the broad market. Now, the biggest thing is you need to make sure that the broad market that you're looking at, it should be representative of your portfolio, right? For example, if your portfolio is very tech heavy, we got all the momentum stocks. I got Facebook, Google's, Microsoft, Fastly, CrowdStrike, Zscaler. I love those stocks. All SaaS, all tech stocks. Then your broad market, your portfolio kind of a more gels with QQQ, which is a NASDAQ 100 ETF. But if your portfolio is well diversified, then you use SPY as a broad market. Or if your portfolio only has got small and medium businesses, use IWM. There are respective indices for it. QQ has got NDX, SPX, RUT. I'm not talking about indices right now because we all are, trading small portfolio accounts. We only focus on ETFs. I don't trade indices much. So you could find out what's your, because you will need to know if it's tech heavy, what's happening in the tech world. How will that impact my portfolio because my portfolio is tech heavy? And then you can keep QQQ as a North Star. This is what I want to look at always. And I need to understand if QQQ goes down, what potentially could happen to my overall portfolio. Or if it is well diversified, keep an eye on SPY. Use that as a barometer of a broad market for your portfolio. So when we talk about portfolio BetaVD delta, it is very personal based on what type of stocks you have or what's your portfolio constitution. Okay, let me see. There are some questions. Chindan says, for individual tickers, we might be bullish or bearish with different expiry times, position sizing, overall delta that's taken into account. So it does, because again, what you are bullish or bearish doesn't mean anything. When we are talking about looking at our portfolio level or trying to do some risk management, what I think about markets doesn't count. So when I get on the morning and start looking at my positions, thing is what I think doesn't mean anything. I leave it outside the door. I need to know what my delta is right now, and stock could go either up or down either way. Okay. And Chintan, when you're talking about the overall delta, it does take into account your multiple expirations. It does take into account the delta of each of the positions. What it won't take into account is what your outlook is. For all that matter, you could be very bullish, etc. And I think we covered it in our delta sessions. Like if you are bullish, make sure your delta reflects that. Make sure your positions are such that your overall delta is bullish. Because if you think market is going to go up, make sure you have a lot of positive deltas in it. The calculation of delta or portfolio BetaVD delta will not take into account what you think. That's a pretty standard mathematical calculations based on the positions that you have in your account. Whether those are stocks, whether those are options, whether those are options in current expiration, future expirations, whether those are short options, long options, call, puts, combinations. At the end of the day, all of them have a very specific delta value, and the ticker has got a beta value. So mathematically, not a big deal for any formula to calculate what's the portfolio BetaVD delta is. Will it take into account position, number of contracts? Yes. And that's what I was referring to, Steve, is if you have one stock, one unit, that delta will be 1. If you have 100 units of FB, your delta will be multiplied by 100. And we will look into some of the examples. Or maybe let me do that right away. So we talked about Facebook. Facebook delta was 8.65, right? So, so let me see. Let me add a few more Facebook shares. $20. You see the delta has increased it to 28.65 because I added 20 delta. Individual level, you can see your deltas here. 20 stocks will have 20 delta, 5 stocks, 5 delta. One put that I sold had 27.44 delta. One put that I bought has got negative 23.77 delta. So when you look at overall delta of your position, let me get rid of these slices. I don't want to do any simulation right now. I don't need this. I just want to see what's my delta based on where the stock is right now. So right now I'm at 28.65. If I reduce my stock position, my delta reduces. So it does take into account your number of either the stocks, or if I'm doing, say, options, how many options I'm doing. Now I sold a put which is bullish. I got 25 more deltas. Overall deltas increased. If I sell more contracts, the delta will change accordingly. Right, I hope that clarifies. All right, so getting back. Yeah, so we were talking about you based on what's your overall portfolio looks like. And that is something which you only can tell is, do you have more techie stocks? Are you the one who would like to have a well-diversified portfolio? What do you have in your portfolio? Based on that, we'll pick up what do I want to compare against, benchmark against, or look at, what's in market, which one should I look at? Should I look at QQQ, SPY, IWM? Okay, again, here we are not looking at individual position or even individual ticker when we're looking at portfolio beta weighted delta. Let me bring that up over in Tastyworks. If you go to your positions, these are all the positions. I got a FB, and in FB I got 5 stocks. I have a put spread. I sold a put spread. On FXI, I have a straddle. On J&J, I have a stock, and I have an iron condor. So I have tons of, multiple positions here, and with different type of trades in it. I can customize to see, I want to see all its delta. So this is where it shows me the delta. It just adds up all the delta till 106.24. That's of no use to me, because XLU will move differently than Facebook. They got a different betas. So I need to understand what's my beta weighted delta. So you click on a checkbox, which means I'm doing beta weighting, and I'm trying to do with SPY. Means now this will tell me, after adding all the mumbo jumbo, it is giving me one number which will tell me this is the impact of SPY movement on my stock. And that number would be this delta is 19.05. It means the impact of all these positions in my portfolio is as if I am holding 19 units of SPY. You get all the ingredients. If you're making a smoothie, you get all the fruits, you get apple, you get mango, banana, add milk, etc. Mix it up. In the end, it will tell me you got a quarter or you got an 8 ounce of this smoothie juice. And now I need to only monitor how much is the 16 ounce of smoothie glass selling for. That's essentially what a beta weighting will do. It will mix up all my positions. And if I try to beta weight it against SPY, now it tells me the impact of all my positions is as if I'm holding 19 SPY. Means if spider moves by $1 up, my portfolio will gain $19. Approximate give and take, right? This is not a legal commitment from your trading platform. So don't go and sue them or don't call up help desk saying, oh, it moved differently, right? Approximate. If SPY goes down by $1, my portfolio will go down by $19. This is what portfolio beta weighted delta means. So if it's tech heavy, I'll say I want to beta weighted against QQQ. Then it will tell me how this portfolio would behave based on the changes in QQQ. You can mix up everything and saying you have 21.5 units of QQQ in your portfolio. This is very important because I can't start managing each position by position. But if I know that I can keep an eye on QQQ, that's very easy. I need to monitor one ticker and make decisions based on that. When I'm doing trades, when I'm closing, opening, or deciding to manage trades, that becomes much easier for me to manage at a portfolio level. I hope this makes sense. Do let me know if there is, if you have further questions, because this is important. Understanding the concept of beta weighted delta at a portfolio level is the very base, because we will now derive all the decisions from this. I do see some questions. Okay. Does anyone have an account at Fidelity and other brokerage, and anyone has been following this? I know that Think or Swim shows it right up front. I mean, you can upfront means you have to come to your position statement and see what's your overall delta is. Tastyworks, they show it right on the top. What's your overall beta weighted delta is. I don't know about Fidelity. But if not, I mean, Ramesh, we still may have to do some crude calculations to understand what's my overall beta weighted delta is, so that we can make decisions at a portfolio level. Okay, let's move on. Again, we are not looking at individual positions or even at individual ticker, right? If I'm looking here, my eyes are glued onto, there's no way to collapse all. My eyes are glued onto this one. So sometimes in a chat, I'll mention, my deltas are too high. I'm talking about this. Or I did this to reduce my delta. I'm not looking at, on an individual position. First thing I'll look at is, where's my portfolio? Excuse me. Let me sip some water. So I will look at what's my overall portfolio, because win on some trade, lose on some trade, overall portfolio I should be concerned about how I'm doing on overall portfolio. So that's why I keep an eye on overall portfolio weighted delta. Let's go back to SPY. If 350 means my portfolio is equivalent of 350 S&P, 350 SPY. We just talked about it in this simulated one. My SPY portfolio is 90. It means my overall portfolio will behave as if I am holding 19 units of spiders. It means if spider gain by $1, my portfolio will gain by 350 if I have 350 spiders. If my portfolio beta weighted delta as when it is beta weighted to spider is 350, it means approximately if SPY goes up by $1, my portfolio will go up by $1. Right. Now the bigger question is, what's the right portfolio beta weighted delta? Is 20 the right number? Is 350 the right number? Is 200 the right number? I don't know. It's you and only you can determine what's the right number you are comfortable with for your portfolio. Say if you got now I would just say PBWD. If you got a PBWD of 1,000, it means if SPY goes down by say $5 tomorrow, your portfolio could be down by $5,000. Is that okay for you? Will you lose sleep on it? Only you know. I don't know. So only you can determine what's the right number for you. But once you determine the right number, then make sure you track to that number. So if that number is 200, right? And again, that's up to you. If you want to keep that number at 200, and this could be changing, because say if my outlook towards the market has changed, I think the market has fallen too much. Now from here, it should go back up. In that case, I would want to have larger PBWD because I'm expecting market to go up. Now, whether market goes up or not, that's entirely a different question. Right? But if I want my portfolio to reflect my outlook towards the market, which I am thinking that market should go up, means I'm bullish on it, then I want to make sure that my number says more than 200, because now I'm bullish on market than usual. Or if I am bearish on market than usual, then I want to make sure that my portfolio PBWD, I reduce that, make it less than 200. And there was some question around the bullish, etc. That's what I meant to say. If you are bullish, make sure your overall portfolio reflects it. Or if you are bearish, just don't say, I think markets will go down. Take an action on it. Make sure your portfolio reflect your bearish position. And rather than looking at each positions, which could be overwhelming, just go and look at your PBWD. And if generally you want to keep 200, maybe you want to reduce it. That again depends on you. What's your risk taking capability? Maybe you want to reduce it to 150, maybe 120. Use this number to make the decisions on the types of the trades that you should implement. And I'll dig deeper into it, that when I'm opening a trade, so till now we only focused on when you're opening a trade, what's your outlook on the ticker, based on that we open the trade. Now we will take a step back and see how that trade could be impacting my overall portfolio. And then see, does that trade helps portfolio or not? At the end, a trade is an individual person in the team. I want to make sure my whole team wins. So it's great that I have a good sense, and I know about this particular ticker, and I have a good outlook that it will move in this direction. But if it doesn't help the whole team, if it doesn't help the whole portfolio, if it doesn't represent my thinking on how and where I want to take my portfolio, then that individual trade, is not useful to me. So now we'll talk into how to take certain decisions based on the portfolio beta weighted delta number that you have, and what's the number that you are comfortable with. Based on that, how to decide on various trade decisions. Question from Steve: can you have a PBW that's a negative number? Yes. In that case, you are bearish about the market. Many times when we chat about delta neutral, I think Dave asked me but this question sometimes, saying, is your portfolio delta neutral? All he was asking me was, is my PBWD close to zero? And I told him no, because I have a bullish outlook towards the market, slightly bullish. So it's not too huge. So I don't have a portfolio beta weighted delta of 1,000, but I have some hundred, a few hundred, because I'm bullish. If I'm bearish on overall market, again, when you're trading options, we want to make sure that we balance our portfolio. Is that, when stock goes down, your volatility goes up, you have sold options, those will go against you. So you better want to have a negative, a negative PBWD if you're bearish. So if you buy a put, just buy a put, in that will give you negative delta. But yes, PBWD can be negative. It means your overall portfolio has become bearish. Okay, so let's look at how do we use this information, PBWD, to drive decisions. And those decisions could be when I'm trying to add a new trade, or when I'm trying to manage a trade. We talked about 4 management techniques. We talked about trade entry criteria. Or when I'm trying to exit a trade, we talked about trade exit criteria. But those criteria were all focused on a particular ticker. What's happening on that trade? Now let's add another element to it. I'm not saying all those criteria were wrong, but all I'm now saying is add another element to it to see how does this will impact my portfolio. And then see if the step that you were about to take, will you still take that? Or maybe you want to back out of that. So we'll take some scenarios here. Say your standard portfolio PBWD was 200, but now the market has fallen. So your PBWD will change. Remember, if you are trading in options, your delta keeps on changing. It is not constant. Delta one-on-one session. So if you have options, if you are in this session, it means you have options. So I will assume that all of you have options. Otherwise, you wouldn't be here. Your PBWD will change always. If market goes down, you will suddenly see the values of PBWD has increased. If market goes high, your PBWD value will decrease. So in this case, say you were comfortable 200, close to 200. Yesterday you looked at your portfolio, it's fine. Today morning you get up and you say, oh, market has gone down. Your PBWD has now changed to 300. That means now your portfolio has become more bullish than you want it to be. So you may want to do some trades that could reduce the delta, because the number that you're comfortable is around 200. But in this case, because the market fell down, your overall portfolio has become more bullish, because the portfolio is now screaming for market to go up. Your PBWD was 200, because it became more bullish. Now the number will jump to say 300. Now, if you are searching for a new trade, look for the trades that can give you negative deltas. For example, maybe you are bearish, maybe you have a stock in your portfolio. You can sell a covered call against it or a call spread. It will reduce your delta. It will give you negative delta. Do a covered call. Or you can do a poor man's covered put. All these will give you negative deltas. Or if you have, you're trying to look at, add some new ticker, maybe look for a ticker on which you're not bullish, but you are bearish. Maybe pick up some energy ticker or energy ETF and sell a call spread over there, because that will give you negative delta. If you are very bullish on another ticker, maybe hold on for now because your overall portfolio has already become too bullish. Or to get negative deltas, you can sell stock. But mind you, when you sell a stock, you will have tax implications based on when you bought the stock. So this may not always be the most appropriate method, but it could be, it will give you negative delta. For me, many times I'll just, sell stock short. I don't have the stock, but I'll just sell it because I want to reduce my delta. And I've done that with, spiders, because I beta weight my portfolio to spiders. And then I think, oh, it has become too large than I am comfortable with. All right, let's sell spiders 50, sell it short. It immediately gave me 50 deltas negative. And 0 commissions nowadays. So what I got to lose? Nothing. Earlier, there were commissions on selling and buying of a stock. So I would think twice, do I really want to do it? I will lose, $7. And then I'll buy back and close it. I'll lose another $7. Today, there's no commissions on stocks. So many times I'll just go and, if I were to reduce the delta on PBWD on my overall portfolio, I'll just sell SPY. I'll just sell it short. If market goes high, I might lose on SPY because sell it short, but my overall portfolio was 300. This will gain. My focus is on make sure my overall portfolio is at a level at which I'm comfortable with. So when you're doing a trade, look at your PBWD and then see if the trade is helping your overall portfolio outlook or not. And like I said, the outlook could change, right? It could change from week to week. Markets have gone, all the tech stock were down 10%, 20%. Apple has been down, 20% plus from their recent high. And I think there should be, those momentum stocks should go up. Fine. Maybe then you're saying instead of 200, maybe you are not comfortable with 300. Fine. Look at your PBWD and make sure that it is maybe closer to 300 and then take decisions based on that. So this is one example how you can use it for a trade entry. Let me see any questions. Okay. All right, other example, your PBWD actually fell down because the markets went up, which was good, but now your portfolio is not as bullish as it was earlier. So it is more bearish than you want it to be. I would, rather than saying more bearish, I should say it is less bearish, less bullish than you want it to be. Because now if the market goes up by $1, your portfolio is going to move only by $100. You wanted it to move up by $200, so it is less bullish. So now you should look at the trades that can give you positive deltas. Remember that trade, the high flying SaaS stock? Now it's the time. Let's sell a put in that, or maybe let's buy the stock if you want to. Again, I'm not suggesting that you should buy a stock. All I'm giving is some examples of what are the trades that can give you positive deltas. You could sell a put or a put spread on the stocks that you've been eyeing. Or you could do a poor man's covered call. means you buy a leap and then you sell a shorter dated calls. Again, net, it gives us positive delta. Buy a stock. A quick way to gain positive delta, buy a stock. Again, there are pros and cons of buying a stock or selling a put. Both can give you deltas, but both have advantages, their own advantages and drawbacks. So make sure you check those boxes before you say, how do you want to increase your deltas? Because I have done both. I started with shorting SPY to get negative deltas. Then I realized market is not going down. Market is going up, but I'm not being paid for my time value. So I'm like, what? I'm buying back the short stock. I'm selling call. At least I want to get paid for the time value. Right? It will need a little more management. That's fine. So depending on how how much you can manage it, and based on that, you can decide you want to buy or sell a stock, or you want to reduce or increase the delta using options. Remember, in options, deltas are soft. They keeps on changing. In stocks, delta are hard. You bought an FB delta will always be 100. Don't care, stock went high, your delta position on FB is still 100. But if you sold a put on FB and your FB went high, say you sold a put on FB at 50 delta when you opened the trade, FB went high, now suddenly your delta has reduced from 50 to 40. So it means if I still have the same outlook, I want to increase my delta. So we'll need a little more management. But then you got an advantage that you got paid for the time. So again, different, I don't want to, diverge from here. There are pros and cons of each of these approaches. You figure out what works for your lifestyle, what you are comfortable with. But the net result is, if your portfolio is now less bullish than what you want it to be, you need to pick up some trades that give you positive deltas. Yeah. So if you own stock but no options, if your delta is positive, yes. If you just own stocks, your delta will be positive. Or if you have just short stock, your delta will be negative. Okay, so next one. Your PBWD is close to 200. Right? You will never be able to achieve the perfect number that you want it to be. So when people say delta neutral, that doesn't mean my PBWD needs to be 0, because the moment I bring it to 0, some stock will move, SPY will move, and there I go. Right? The goalpost will move. SPY, every second it keeps changing. So you can never have a perfect number on your portfolio always. You will have a range. So when I see I'm delta neutral, it means I look at the delta and say it is, maybe less than 0.001% of my overall portfolio size. There will be a range. You will never be able to stick to one particular number. So let's say your PBWD is already close to 200. Right? So your delta wise, you're good. You have the risk that you're okay with. You're bullish about your portfolio, and it is at the level which you are fine with. So now what you should do? Now maybe you should implement a trades that are delta neutral. When I'm talking about trades, these are only option trade in which you can do a delta neutral and still make money. I think in one of our previous one, when we just started talking about these Greeks, there was a question on how can you make money if you are doing a zero delta trade. You make money by theta and vega exposure. Two other Greeks, and those help us. And in last few weeks, there are many trades. So if you are a pro, if you're supporting this club, you signed up for a pro membership, you would have received a lot of alerts where I'm saying, oh, didn't have to do anything. Stock didn't move at all. Theta decayed and trade is profitable. Got auto closed. I think I had many trades in last 2 weeks, which was just closed where the stock hasn't moved at all. Moved at all means less than 1% movement in the stock. It went all the way, came back at a position where I initiated it, but theta decay helped us. Vega decay helped us, and we closed the trade. In some cases, the stock actually fell down and I had a bullish trade, but theta decay helped us. We still closed it for profit. So if your PBWD is fine, then you should look at doing delta neutral trades. Maybe iron condor, iron fly, strangle, straddle, based on your risk profile, based on the option level privileges, pick up delta neutral. Or you can buy a stock and sell a call spreads against it. Maybe you buy 40 or 30 shares. Let's say if you are interested in FB, buy 40 and 30 shares and maybe sell, call spread against it. So let's do some of these examples right here. Let me just finish this, then probably go to examples. Or you can buy an iron corner, iron fly, strangle, straddle, depending on what's your outlook towards the market is. So if I'm selling it, then I'm thinking that market will not move beyond this range. And based on then I'll sell these iron condor, fly, strangle, straddle. But if my outlook is market will make a big move, in that case, I could buy these things. But again, my outlook is that I don't know what the market would do. So I don't want to increase the delta right away, but I could do these trades. These are all delta neutral trades. Will not be adding any more delta, but I could still benefit from theta decay and vega decay, or vega increase if you're buying the options. So let's jump onto the trading platform and see the impact of these decisions and see how this will change it. So for example, okay, so this is 19. Say I want to, I cannot see the impact of the trades that these are only show for the trades that are executed. Okay, in any case, let's say my comfortable level for this portfolio is 30 deltas, 30 PBWD. Right now it's 19. So in that case, I would want to go and if I find nothing else, because I cannot find any other stock in which I'm bullish about, I need to increase my delta. So I need to do bullish trades. But I don't know which stock could go high or low. I haven't studied the stock. So in that case, my first choice will be, what? Ignore everything. I'm just gonna go and pick up SPY and add 20 delta to this. So in that case, I could just come and, but sell a put spread that will give me additional 20 delta. Say I sell this 40 delta put, 40 delta put, and I buy this 20 delta put. So this will give me additional 20 deltas, which I want. Get it? Okay, around 15 delta. So if we want to increase my delta, I could do this put spread. If I can't find, like I mentioned, now it's the time maybe you go and do a put spread on a stock that you want to own. If you have nothing of that sort of a radar, maybe just do it in a SPY. Because you are anyway doing your portfolio beta weighted delta against SPY. You want to increase it, just do it on a SPY. Or if you have a QQQ, just do it on a QQQ. And that's what I do for risk management. I don't go and start trading on individual ones. I can't, and I shouldn't. Because individual trades, it's too difficult to manage. So I look at overall portfolio level. Then based on this, I'm like, I want 40. I need 20 more delta. Okay, let me pick some 20 delta from SPY somewhere. And we'll do the trade accordingly. Or if I'm okay with 20 delta and my portfolio has got 20 deltas, close to 20 delta, which is 19 delta, but I want to stay engaged and I want to make sure I can, the money which is lying in my portfolio, I can still use it and continue to trade. In that case, I will do a neutral trade rather than doing a bullish trade. Where are we? I'll go and sell a call spread. Sorry, an iron condor. Okay, I'll do this trade. So yeah, not exactly, there is -4, so we can go and change the strike prices to make sure I can get as close to 0 as possible. So this has got, right now it's a little bearish. That's what's got negative delta. I just need to make sure I move this to the right, just change some of the strikes. I'll do this. It doesn't add any deltas to my portfolio, but if SPY says between these two range, I could still make money. So means I am not adding any more risk right now to the portfolio, but still giving myself chance to profit from the market. But remember, in an options world, if a stock moves, your delta will change. So 2 or 3 days later, when you're looking at your portfolio, at that point of time, you should look at, oh, what's my new delta now? I had 20. I had put in a delta neutral trade, iron condor. Now it has become 25. Am I still okay with it or not? If I'm okay with it, it's fine. Otherwise, I will manage some of the trades to reduce my delta. Okay. I see a question from Raghu. If PBWD is 100 and SPY falls by 2, yes, if your PBWD is 100, SPY falls by 2, means your portfolio could drop, overall portfolio could drop by 200. Again, this is based on the correlations on the historical data, right? Sometimes stocks start to diverge. So again, this, just don't think and say, market went up, I had a PBWD of positive, why my overall portfolio value has gone down? Maybe some of the stock has diverged, right? We have seen gold and SPY used to be negatively correlated, haven't behaved in last few months, but over a long time this will work out. At bonds and SPY needs to be negative correlated. Haven't seen that happening. So Raghu, I hope that answers your question. So negative PBWD is if you only have, let's say, short stocks, or if you're doing options, you have a lot more calls, negative delta trades than what you have for the trades that give you positive delta. Okay, let's jump right back. So based on your PBWD, your comfort at what level of PBWD you want, and what's your current PBWD, you make a decisions when you're trying to enter a new trade. Just make sure you go through all the other trade entry checklist. But before you click confirm, put an overlay saying, how is it going to impact my portfolio? I know this individual person is a great, but how is it going to impact my team overall? Just put an overlay and think if you want to still go ahead with it or not. Okay, think about it when you're trying to do trade adjustment. Let's say your portfolio beta beta delta is 250. You were comfortable with 200, but now it is 250. And you have an iron condor which is challenged on the call side. So what do we do? If your call side is being challenged, we want to roll up the put side. But what happens if you roll up the put side? It will give you more deltas. Now your PBWD is already 250. Will you be okay with a few more deltas? If yes, go ahead and do it. If no, maybe just wait. It is okay that you may lose on this option trade, but you have not to increase the risk on your overall portfolio. You may want to hold on to your adjustment trade. And again, when you do those adjustments, those may be very minuscule. All I'm just trying to say, just when you're doing it, quickly run it through, on your mind at how many additional deltas am I collecting by doing this? If you're moving your put, rolling up your put, let's go back to SPY from 325, say you had sold a put at 310. Now you're rolling it up to 320. So 310 is 39, 320 is 45. You're adding 6 additional deltas in your portfolio. As long as you're comfortable with it, fine. Go ahead and do it. Just look at it before you click confirm or send. Just put an overlay or just think about it that I'm adding more deltas to my portfolio. What's my portfolio PBWD currently is? Okay, similarly, let's talk about trade exit. Your portfolio beta beta delta is 150. You have 2 trades. Both are close to hitting your profit targets. You have a short put spread, short call spread. Now you have to decide which one to close or which one to let it run. It has not hit the profit target, but they are close. In this case, I would rather close the short call spread because I'm already short of deltas. So I want to make sure my bullish trade stay on. So I will close the call spread because this is a negative delta trade. And I let my put spread stay because it is giving me positive delta that I need for my portfolio. In some cases, and this is one case where I have used it multiple times. You would have seen in the comments saying, oh, I'm doing this because it supplies me with the negative deltas, or I'm closing this now because my portfolio is already bullish. Even though this trade has not hit the profit target, closing this will reduce the deltas. So close this. So again, when you're closing either a put or a call, just think about it. How is it helping your overall portfolio? Are any questions? Otherwise, let me just sip some water. All right, lastly, This is, I just talked about is, I do it is PBWD specific trades, right? My current positions are all fine. None of them are being challenged. None of them are close to profit target. And I don't want to open any new positions in any of the other tickers because none of them has got a decent implied volatility rank. But my portfolio PBWD is 250. What do I do? This becomes very specific trade just to reduce the portfolio beta VD delta, just to reduce the risk at a portfolio level. I could go and sell a call spread on SPY. Now that doesn't mean I'm suddenly becoming bearish on market because I'm selling a call spread. It doesn't mean that my outlook towards the market has changed, that, oh, I think the SPY will go down. No, that's not the case. I am just doing this to reduce my PBWD because this is more than what I'm comfortable with. This is a trade which is very specific just to manage my PBWD at a portfolio level. Individual level, I don't even care what's happening to my other positions. Because right now I just want to reduce my PBWD and I can't find any other ticker to mess around or to change in my portfolio. What do? I'll just go and pick up SPY. Or if your portfolio is too tech heavy, you may want to do it on QQQ. Or I could short shares of SPY. This is something which I was mentioning earlier. I had done it. I wanted to reduce 100 delta. I just sold SPY, 100 SPY at, and that was a time when SPY was at 320. And it went all the way up to 340 or something. And I held through it because my rest of the portfolio was already bullish. And I'm like, I'm losing money on SPY. It's okay. Overall portfolio, I'm still gaining. That was the whole, my intent was to overall, I want to make sure that I don't become too bullish. I didn't know that the market will go high. It could have gone the other way around also. Right? So, but I had an idea at what's the level of the deltas that I want in my portfolio. Delta represents the risk. Market could go low, market could go high. We don't know where it will go. So I wanted to reduce that 100, reduce my deltas by 100. I couldn't find the other stocks where I could, reduce it by 100. Because if I sell a call spread, say in Facebook, I might be able to reduce by 10, 20. Then I have to sell 5 contracts on. I generally use SPY or QQQ when I have to take a decisions at a portfolio level on reducing my deltas, on reducing the risk in the portfolio. Those who are professional traders, those who trade in futures, they actually will do ES or minis. Because even for SPY, I have to sell 100 SPY. But if I sell one ES, that is equivalent to 500, right? Or one MES that, I have to sell only 2 MES. But I don't trade in futures. So I stick to SPY. Pick up whatever vehicle you want to pick. But these are some of the, trades which I do specifically to reduce my overall portfolio deltas. Or could buy a put. Buying a put give you negative delta. Now, I'm not saying which one is the right thing to do. But all these trades will give you negative deltas, which I want. My portfolio here is higher than what I want it to be. The PBWD is higher. Okay. So that's all I wanted to talk through today, is how you can look at your portfolio. So we talked a lot about how to look at an individual trade, how to put in a trade, how to manage a trade, how to exit trade. So today I want you to take a step back and focus on your overall portfolio. And then how do we add one more layer of decision making when we are trying to enter a trade, exit a trade, manage a trade? Again, this won't be too big of a burden when you're trying to do it. Or how to use these common ETFs just to manage and reduce the risk on your portfolio. If your portfolio has become too bullish, maybe sell some SPY, sell a call spread on SPY. That's the easiest one. If your portfolio has become too bearish, sell a put spread on SPY, buy some SPY, rather than trying to tinker with individual tickers. Okay. So lastly, takeaways. Delta denotes the risk in the portfolio. I can't emphasize enough. Delta tells us a lot of things. The biggest one is, what's the risk in the portfolio? So always keep an eye on portfolio level delta, PBWD delta, I should say. So on your trading platform, make sure the beta weighting you are doing represents the nature of your portfolio, right? If you are too tech heavy, use QQQ and beta weight your portfolio according to QQQ. If it is diversified, use SPY. So before adding a new trade, think how it will impact your overall portfolio, right? Because sometimes you have to lose a battle to win a war. I have done many trades in which I have also mentioned when I open a trade, I hope I lose on this trade because this will help overall portfolio. I hope, it's okay if I lose on this trade because I'm not focused whether I make money on a particular trade or not. My focus needs to be, and so should be yours, is my overall portfolio winning or not? Is the team overall winning or not? It doesn't matter what one person has scored. Is your overall team winning or not? So it's okay to lose on a particular trade. Don't feel bad about it. Sometimes we have to lose a battle to win a war. So in those cases, we'll do those trades. I was talking about my short SPY trade, which I did it when I short SPY at 320. Hell, I lost money on this because I closed that trade when SPY was at 340 and converted it into options. So I kind of lost, $4,000 on it. It's okay. I gained a lot more on my portfolio. All right, so that brings us to the end of today's session and end of this boot camp. Now, let's use the rest of the time for any type of questions that you have around options. Bring it on. And if you want to talk through it, just raise your hand and I will unmute you. We will not, I won't be meeting you next Wednesday. So this is the time for you to ask anything that you would want to. But if you're attending Saturday sessions, we will continue to talk on Saturdays. But we're not gonna go deep into an options education. We don't do that on Saturdays. So if you have any questions around options, this is your opportunity. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.